All right. I think we're good to go. Awesome. All right, guys. I hope y'all had an amazing weekend last weekend. Me and the family drove over to Jacksonville to celebrate my brother Charlie's 51st birthday as a surprise to him. That was a good time. We had plans to come back Saturday night. Those plans got foiled, and my mom got very sick, and so we ended up staying in Jacksonville Saturday night and then driving home, and we got home yesterday evening. But all in all, it was an awesome trip, and glad that I was able to spend time with the family and celebrate Charlie's birthday with him. I come back this morning, and the markets are up nicely. ES right now currently up about 62 points. I actually, believe it or not, was added at about 3 a.m. Eastern time. So I've been watching the markets up for quite some time now, about 5 hours. I've been awake. But if you are just now waking up and seeing the markets and you had any kind of bullish trades that you entered yes or Friday down towards the lows, then you'll be very happy waking up this morning. The market's up 62 points. As a reminder, Trendy John is gone until July the 13th. That means it's you and I will be dual broadcasting in both the Trendy room and the SPX room. Now, understand Trendy room in particular, when I am dual broadcasting and starting here at 7 a.m. Central Time. 8 o'clock Eastern. I'm not going to be on the microphone for an entire hour and a half before the market opens. I just don't need that much time. I will spend as much time as needed from starting at 7 a.m. Central Time until we cover everything. Then I will get off of the mic in both rooms, take a little breather before the first hour of the cash session. And that first hour of the cash session, I will be calling out live in both rooms. If I am calling out levels and I'm saying the ES chart, that would mean the ES futures chart. But regardless, if you trade ES futures, if you trade SPX, if you trade XSP, if you trade SPY, whatever I'm calling out, the levels are the same. Same way if I am looking at an SPX chart whenever I'm calling out a level on SPX. If you're an ES futures trader and I say that I plan to go long from such and such buy zone on SPX, and I say, okay, prices hit that buy zone, I'm going long. Even if you're a futures chart, you can still use that information. If I'm going long on an SPX chart, that means the futures chart would also be in a place that if I were trading futures, I would be going long. I also call out levels regularly on the NASDAQ chart because I am a very firm believer that the NASDAQ and the Dow charts are every bit as important as the ES chart, even if I'm day trading SPX. And the reason why is because ES is not the author of its own price action. It is drug around by the NASDAQ and the Dow. So those NASDAQ levels and those Dow levels are also very important. Therefore, I do call out those levels. So if I'm looking to go long from a buy zone and I see that the NASDAQ and the Dow are at areas of resistance, I'm going to tell you that live on the mic. I'm going to say, all right, even though we're in a buy zone, looking at the NASDAQ chart, it is at the bottom of the PMZ, which is a sell zone. And so I'm expecting resistance here. For that reason, I'm going to hold off going long on SPX until this happens. I will say things like that using the NASDAQ chart or using the Dow chart. All right. I know in the SPX room, you're very used to that. Trendy room, that might be a little different. But I just want to give you an idea of what you might hear on the mic as I'm calling it out. Now, as far as the first hour goes, my focus really is on day trading SPX or XSP. Other names such as Apple or Amazon or Google or Nvidia, they might set up in price at the PMZ. If that happens and I see a good setup and I'm not actively managing an SPX position, I will take the time over the next couple of weeks while John is gone to call out those names that are in their PMZ and then share with you a potential day trading plan, because I believe before I get in any trade, I know exactly what the plan is. I'm not just going to tell you, hey, NVIDIA's in its PMZ, it's a good place to go long from. I'm not going to do that. I would go to a NVIDIA day trading chart, and I would give you the levels that I would look to be trading on NVIDIA. So it's going to be more than just, prices inside of a PMZ. You can go long from there. I will call out the actual levels that I would be targeting based on the chart and give you that plan ahead of time. Okay. All right. Now that I covered all of those details and what you can expect over the next couple of weeks while I'm dual broadcasting and trying to keep track of both rooms all the time. I would encourage you, if you ever have a question, I don't uh, discourage questions at all. Trendy John and I absolutely love education, and teaching and asking questions is how you learn, right? So if you have a question, though, please, especially the next couple of weeks, make sure that you are tagging my name. It's the at symbol and then my name, Melissa, after it, so that I will hear the ding knowing that I have a question. Okay. All right. So let me get started with the ES futures charts. We like to start from a top down approach. That means looking at the weekly chart first. I need to know on these bigger time frames where I would be a buyer and where I would be a seller. Rad says the audio is choppy. Are we having that issue? Lorna Mirza, do I have a choppy audio? Okay. All right. So, Rad, I would refresh the room. Everybody else says we're good. All right, so where I would be a buyer on the weekly chart on the ES is, well, it pulled back into a demand zone. It pulled back into the 9 EMA on the weekly chart, and it pulled back into the bull channel here on Friday. We closed right in there, and we're getting a pop from there. So the fact that we're opening up 65 points up, as supply and demand traders, we really should not be shocked. Okay, because this is what we expect price to do when it enters a demand zone. We expect buyers to show up in unison and drive price higher. Now, on this weekly chart, I have a level marked at 74 or 75.75 is what I'm going to call it, all the way up to the topping wick at 76.48.75. That for now is not supply on the weekly chart because we don't have candlestick structure to label it supply. But the topping wick is signs that there was selling pressure there on the weekly chart, and therefore I'm looking for resistance here on the weekly. I will break it down to smaller time frames to see if we have a supply zone now. So I'm going to go to the daily chart, and I want to show you the supply zone when it was first created. It was first created right here where we had an initial candle, then a candle that closed inside the body of that initial candle, and then this big imbalance candle right here on June the 5th. This imbalance candle was my first clue that there was supply. Then I looked to the left. I saw the formation. I drew my supply zone in. Then we gap up. We actually make a higher high on that gap up, but we closed inside of this supply zone. This is how wide the supply zone was then at that time. We closed inside the supply zone, so the supply zone was never removed from my chart. The next day, we made an inside day and then a down. That created a little bit lower supply zone. The following day, we created an inside day, a second double inside day, and then a down day on June the 23rd. That meant that we now have created an even lower supply zone. So right now on the daily chart, we have supply at 75.41 to the high 76.48.75. All right. In this area, you will notice that we have an upper monthly edge and upper weekly edge. Now, this upper monthly edge is still valid today and tomorrow. After that, we will move to July, and this is the July upper monthly edge. Either way, they are virtually in the same spot. They're all inside of this supply zone, and that makes sense because upper edges equal playing fields of supply. So inside of this supply zone, I am looking for sell orders to be filled. When sell orders are filled, that leads to prices falling back to the downside. Okay? So my sell zone on the daily chart is here at 75.41, 76.48. That's where I'm expecting selling pressure this week. We also have an inside and down right here that was created last Thursday. I didn't make this a big, huge red zone all the way down to 74, 76 and a quarter. I said what I would do is mark this area that is supply, but I'm going to mark it here and I'm going to watch and see how price reacts off here. On smaller time frame charts, this will be a sell zone for me. But as far as the daily, I'm using these bigger candles to mark supply, not the small candle. Okay. So why is this resistance here? Why would this be a sell zone? Well, you got the top of the daily cloud that for 1, 2, 3, 4 days, we have been inside of it. Inside of a cloud or inside of any zone, you expect chop. The top being the resistance, the bottom being the support. So you can see that the trendy cloud worked as the top, worked as resistance so far. 1, 2, 3 days. We don't know about today right now, but that top has been resistance. Vice versa, you can see that pullbacks to the bottom have been support. So inside of the cloud, we expect chop. That's really what we've had for several days. But now we are testing the upper end of the chop via the EMA cloud, but also coming into the inside and down candlestick structure, the weekly edge mid, and the white dots right here are the daily 21. Price is below the daily 21, but finding buyers at the daily 50. When price is stuck between these two moving averages, that's also tends to be very choppy. So you can see right where price is right now on this daily candle. If we were to open right now, we would be right at resistance. Keep that in mind when you come into the market. If you haven't been trading the futures, I don't want you to start off super bullish. It's fine to have a bullish bias. I do have a bullish bias today because the overall trend is bullish and today's trend is bullish. But I would rather wait for a pullback into a buy zone to be a buyer rather than being a buyer right at a supply zone or obvious resistance via moving averages. Okay? All right. Yeah, Rom, you mentioned the squeeze. The ES futures is still in that daily squeeze that it's been in basically the entire month of June. It started on June the 4th. We're still in that squeeze. The histogram has went from dark blue. It trended down, down, down. Let me make these a little bit more dramatic. All right. Trended down, down, down. Then we got this consolidation period. We were printing ideal squeezes. Then we lost momentum on the histogram. And today we might be starting the trek back up to positive shifting momentum. We are still negative, below zero right now, but that could change in one day. It could change today. It could change in an hour. I don't know, and I'm not going to try to predict that, but I do know that we are in a low compression squeeze still on the daily chart, but we're right at resistance. Okay. All right. I'm looking for buyers to step in on pullbacks to the daily 50, to the bottom of the EMA cloud, to the lower weekly edge, as long as Friday's low holds and we do not make a lower low this week. This area in here, basically 7,400 to 7,350, is a buy zone for me. Okay. Let's look at the 4-hour chart. I got two Fibonacci's ran here. You know why I have two Fibonacci's ran here? Because we chopped all last week. Okay, that's just our reality. It was very choppy week. We really didn't move anywhere. Basically, we closed almost the same place on SPX every single day last week. All right, that's why you see two Fibonacci's ran on my chart. The first one is ran on this up move from a demand zone. The second one is ran from the high to the low. All right, notice on the 4-hour we closed below the 618 and we're getting a rally back up. Notice on the down move, price is right at the top of the bear channel. If you haven't taken the fib class that John did over a year ago, you probably don't understand when I say bear channel. All right. But The bear channel is when we are measuring a down move, the 23.6 to the 38.2. That is the zone for bears to defend. It is the zone that bulls want to get price above and hold price above. Right now, we're right at the top of that bear channel. I've already showed you on the daily chart where all kinds of resistance right here. Well, here's another reason that not just moving averages, not just candlestick structure, also key Fibonacci levels, say 74, 70, 74, or all the way up to 7,500. This is resistance, okay? This is an area that I'm not looking to go long. I'm not looking to start a new long position in. Okay. All right. Now come back down here to this 618, the golden Fibonacci level. The level that I said on the daily chart, there is a buy zone as long as Friday's low holds as the low this week. This is all in this area based on candlestick structure, based on key Fibonacci levels, right? Based on moving averages on the daily chart that I already showed you. This is the buy zone. Let me remove this right here. This is the immediate buy zone for me. This is the immediate sell zone for me. But if I'm going to call something supply or demand, it's going to have to be not in this super choppy range. It's going to be the upper ranges of the last month. Okay. The upper range and the lower range of the last month is what I am calling supply and demand. In here, you got a big old chop zone, my friends. Okay. Here's the upper end and here's the lower end. Let's look at today's blueprint. Um, JK's asking a question about fibs, and I'm going to read it out loud so that you in the, let's see which room that came across, you in the trendy room can hear it. I did the fibs as you said, but every time price closed above the 618. Above the 618 would be this downtrend here. And unless I am totally wrong, JK, we didn't close above a 618. Yeah. So there's no close above the 618. Zero close above the 618. Okay. Go back and measure your next low. There's clearly no close above the 618, no close above 618, no close above 618, no close above 618, no close above the 618. So that's why my fibs are drawn where they're drawn. Now these down fibs above, JK, you might be just looking at wicks, my dear. Remember, I use candle closes. Okay? I use candle closes. Okay? Now, these fibs right here, legit shouldn't, you could take them off your chart if you want because you did get a candle close below the 618. Not just one, two, but three. Three candles closed below the 618. But I'm leaving this on my chart because as of right now, that 618 provided a bounce over the last 1, 2, 3, 4, 5, 6, 4-hour candles. Okay, so that's why my fibs are where they are. Now let's talk about today's blueprint. I've showed you the upper edge of that chop. I've showed you the bottom edge of that chop. This is the same Fibonacci's ran. This is the top of the bear channel. This is the top of what was chop on Tuesday, Wednesday, Thursday, and Friday of last week. Here is the bottom of what was chop on those towards the bottom of that range. And so this represents my intraday buy zone. It is a lower weekly edge by Friday's low. This represents the sell zone. It is the weekly edge mid by the high or the top of the chop range Tuesday, Wednesday, Thursday, and Friday. Okay, so the immediate buy zone on the intraday ES chart is the lower weekly edge by Friday's low, 73.80. Let's round up and call it 85 by 73.57. All right, and that is where I'm looking to potentially buy a pullback to. Potentially sell a rip would be weekly edge mid by 7,500. 7,503 if you want to use the 50 fib on the down move from the high to the low right here. All right. So this is the immediate sell zone, the sell zone above there. You can use that golden Fibonacci level of 75.37 by 76.04. The demand zone below is going to be 72.85 to 72.32. If I am trading this buy zone, and we are in a bullish trend, right? We're in a bullish trending day, and it is the first test of this zone. I would do a hybrid approach right here, which for me, what that means is I use half of my allocation to start a bullish trade. For me, that means I'm buying at the money calls, okay? Starting a bullish trade here. And then with the other half of the allocation, if there's further weakness at this fresh zone, then I would wait for my confirmation process on a 3-minute chart to then add to full allocation and go long here, trimming at the levels above price all the way up to this sell zone. Now, for the sell zone, notice that the day's trend is bullish, right? The day's trend is bullish. Therefore, I'm not going to have a automatic bid set to go short this zone. This zone for me would be a counter trend trade. That's when I wait for confirmation from the get-go. If it's a counter trend trade, or if the zone has been tested multiple times, I wait for confirmation. Edit asks where I got this zone from. It's the weekly edge mid by last week's high. There is candlestick structure all in here. Sorry, hold on. Sorry about that. There's candlestick structure all in here. I've just shrunk the size of the zone to have just a weekly edge mid. And the upper edge of this is the high from last week. That's it. Okay. All right. That is ES. The only other thing that's going to happen on ES is going to be that we will have we will get a PMZ to print here on a 5-minute chart. The PMZ equals a buy zone or a sell zone. If price is above the PMZ high, which right now would be 74.71, then it represents a buy zone. And I'm looking to go long from it. Right now, the risk on the PMZ is only 2.7 points. I would round it up to 3 points. It's only 3 points wide. It's a small risk. All right. The low PMZ low right now is 74.68.35. You want to treat it as a buy zone if price is coming from above it and coming down and touching it. If you want to take the aggressive approach as soon as price is above the PMZ high, that's a trigger long. If you want to take the conservative approach, you wait for a 5-minute candle to close above that PMZ high. Then you wait for a retrace to the PMZ, either taking the trade as soon as it retraces to the PMZ or waiting for the confirmation process, up to you. Okay? That's treating the PMZ as a buy zone. The stop would be a candle close below the bottom of the PMZ. Now let's talk about if price is below a PMZ, which it is right now because the bottom of the PMZ is right about in here-ish. Okay? Price is below it. This is when I would treat the PMZ as a sell zone. If price pushes up to the bottom of the PMZ, that is a trigger short. Aggressive, as soon as it hits, you go short. Conservative, wait for a candle to close. Wait for a retrace. Wait for confirmation. Whichever approach you take, your stop is a candle close above the PMZ high. That's why for me, the PMZ can be either a buy zone or a sell zone. All right. As far as on my futures charts, things that you will see on the chart, this gold line represents the 8 EMA on a 15-minute time frame. I have the trendy cloud removed from my small time frame charts because it was hard for people to ignore the small time frame, a 3-minute EMA or a 5-minute EMA. It was hard for traders to ignore that cloud, those small time frame EMAs. So what I did is I just removed them from my chart and I put the 15-minute EMA, which whenever I trade is the one that I pay attention to. I put that on the chart. The other thing you'll see on my chart is a VWAP. It is a pink, and I don't know why it's not on this one, but it is a pink line, and I use it for day trading. It is simply just the VWAP anchored to the current day's session. And let me make sure. Yep. Okay. And it's pink. You see it right there? It'll be on my futures charts. The VWAP often is a magnet for price to come back to or travel up to. Oh, I forgot to remove the upper band and lower band because I don't pay any attention to them. But you will see them on my charts as a pink, as just a pink line. All right. You can use this as a target. You can use this as an entry. You can use it how you wish. I personally often use them as targets and or entries. Okay, that's what you will see on the chart. Trader Gal, these boxes are an indicator that we are currently have in the testing phase. They are not out yet, but a blue box represents a set potential sell zone. A pink box represents a potential buy zone, and the gold is the neutral zone or the halfway point between the buy zone and the sell zone. You can change the time frame that they're based on and all of that. It uses trend these zones as well as my confirmation process. So I only have it on my SPX chart. I do not keep it on my futures charts, Trader Gal, but you are in the SPX room, so you'll see it on my SPX chart. And you treat it just like any other zone, but the flags come up if you get the confirmation process. So if you get in a sell zone a lower high and a break below, you would have a sell trigger, and your rewards, if you choose to use these as rewards, are there. Okay, that's all it is. Just buy zone if price is below it, or if the zone is below price, treat it as a buy zone. If the zone is above price, treat it as a sell zone. And these entries will give you the risk and reward if you choose to use those rewards, so you can quickly see what your risk to reward is. Okay. All right. All right, let's look at the NASDAQ from a top-down approach. NASDAQ also came back into demand, into the EMA, into the bull channel. We're getting a pop from there. NASDAQ upper monthly edge is marked on this chart, the all-time high. We got topping wicks here. This is selling a place that I would treat as a target if I'm long from this demand zone. It also represents a place where we could see sellers step in. On the daily chart, price pulled back to my favorite zone to trade, the 50 and the 618 Fibonacci levels. As you know, on that weekly chart, you have demand here. You have a lot of confluence right at the bottom of this zone. The lower weekly edge, the 618, the 50 fib, the bottom of the EMA cloud, all right in here represents a potential buy zone. Right now. The resistance is the top of this daily cloud, the daily 21, where we have inside and down candlestick structure lining up with the weekly edge mid. All of this is resistance till proven otherwise. And of course, the high from uh, last Wednesday, or no, Thursday, it looks like. So all in this area is resistance on the NASDAQ. And right here at the bottom of what was a choppy week is the immediate support. Below there is demand, not fresh. Above is supply, fresh. Okay? 4 hour. Again, I have two sets of Fibonacci's ran for the exact same reason that I have them ran for the ES chart. JK had asked a question. Remember, the ES chart has the Fibonacci's from the all-time high, right? Down to the most recent low. But notice the NASDAQ does not. And the reason why, I'm going to show you, because we did get the candle to close above the 618. Do you see it there? So that's why on the NASDAQ, my Fibonacci's are ran from the most current trend that did not have a candle close above the 618. Okay? All right. Let me remove this 23.6 because price is above it. All right. On the 4 hour, you have inside and down right here. This is where during this pre-market price has stalled out at. Here's the top of the bear channel. It's lining up with the upper daily edge and the top of the 4 hour cloud. This is an area that I'm expecting bears to defend. That means price is right at resistance. Support would be the lower weekly edge back down here at the bottom of what was a very choppy range last week. All right, so on my chart for today, the lower weekly edge down to the most recent low is going to be that first initial buy zone on the NASDAQ today. Now, the NASDAQ is relative to the Dow is leading the way to the upside here this morning. That could change. But for now, the NASDAQ's up about 1% and the Dow is up 0.35. That's why I say it is leading the way. All right. All right. Let's get into the intraday chart. This is the immediate sell zone. I've already showed you on the higher time frame chart why this would be an immediate sell zone. You can see that we are pulling back from here. This daily edge mid, you do have inside and up candlestick structure here. That means that we could bounce from here and never make it down to the lower weekly edge, the lower daily edge, and my buy zone. If that happens, well, that's what happened. But for now, I am using last week's very choppy range to create my intraday buy and sell zones, because until this market proves me wrong, I believe we're still in chop. The market price action has to prove me wrong, because the price action over the last 4 trading days that we have completed says chop, chop, chop. All right, so I have to see price break out and above and get above the top end of this chop before I'm going to believe that we're out of chop. This is my immediate buy zone, my immediate sell zone. Here's your weekly edge mid for this week. As long as price is below a weekly edge mid, the bias is to the downside. We are in below the weekly edge mid, but above the lower weekly edge. Look for the lower weekly edge for buyers to step in, with the weekly edge mid being a target, and then of course the upper weekly edge. The sell zone above where price is at right now is actually based on Fibonacci. And if you want to break this thing down into a smaller time frame, you can find the inside and down right here. But I use the 618 as the top of this zone. So the zone for me above the most recent or the closest sell zone is going to be 30,156 to 30,320. That would be the upper sell zone above this most current or closest sell zone. The actual supply is up here near the upper weekly edge. That is 30,602 to 30,975 and a half. Your demand zone is down lower at 28,771 by 28,227. All right, so on this chart, I have intraday buy zone, intraday sell zones, the demand, bigger picture, and the supply, bigger picture. Any zone north of price represents an opportunity to potentially sell a rip. For me, with the daily trend being bullish and the overall trend being bullish, all sell zones require confirmation for me. A buy zone, if it is today, this morning, we get a flush and it's a first test, this would be a legitimate, at least hybrid approach for me. Or you can, of course, wait for confirmation like you would a sell zone. All right. All right, let's look at the Dow real quick. The Dow and the Russell were stronger, have been stronger last week for sure. Even though we created this big topping wick, I get that. We closed above the prior week. We did not do that on ES or the NASDAQ. Therefore, the Dow was stronger last week. I don't know if it's stronger this week or not, but I'm telling you what happened last week. Right now, support last week's low. Below there, the gap fill, the 236, the 9 EMA, and then demand. All right. This is selling pressure. This big topping wick, all of this is selling pressure. Okay. Until we can get up and above, make new all time high, you expect resistance in this area. Daily chart, it's flat. It's sideways to up. Okay. Right now, we're right where we opened on Friday. That's where price is at. Friday closed down towards the lows on the Dow, and we basically engulfed that body from Friday. Thursday was when we made the new all-time high in the Dow, but we sold off from there. So all the way through here, this is the upper monthly edge for July. This is this week's upper weekly edge, anywhere from 52,734 up to the all-time high. I expect selling pressure there. As far as demand goes, this is the bottom where we got the nice rounding bottom and that push up. If it hadn't been for all of that selling, that would have been a beautiful looking up move. But we gave up most of it on Thursday before we had a weekday on Friday. So demand right in here, 52,119, 51,691. You have EMA cloud right there as well, and the lower weekly edge. 4-hour on the Dow. This was a smaller time frame supply inside and down because of the big down candle. I went to find it. It's on a 1-hour chart. We wicked up above there, but we didn't close up above there. It's not the first test, obviously, right? If we get up to 52,618, I am expecting resistance, but it's not the first test. I have it though on my chart because we've had no candle close above it. 52,618 to 52,734. Here's your demand zone on the daily chart. You've got it on the 4-hour. It's a tested zone. The intraday chart that you will watch today looks something like this. On the Dow, we are above the weekly edge mid. Remember, on the NASDAQ, we're below it. On the ES, we're below it. The Dow, we're above it. That means pullbacks to it. Look for it to be support. You have resistance at the upper daily edge. You have resistance at the high on Friday. And then above there, this is going to be the Fibonacci level from that wick high to the most recent low is the golden Fibonacci level. Then again, smaller time frame, but big topping wick supply 52.9. Does it say 905? Yeah, 905 to 53.097. Okay. All right, now let's look at SPX. SPX, you will not see candles moving, and you won't see that we are actually, let's say 60 points above where we closed at. So all that to say this, we did close below that candle body last week. We technically created an inside and down, inside down. All right. The move down is not huge, but you need to know if you're an SPX trader that 7,500 to the all-time high 76.21 is supply. All right. You can see when we pulled back last week, we pulled back to the bull channel, the 9 EMA. There's no candlestick structure on the SPX in this area, but on ES, there was the candlestick structure to equal demand. On the daily chart for SPX, you have inside and down candlestick structure. Then this was Monday's candle. This is Tuesday's. We gapped down and we chopped within a range. Look at the close of each one of these candles. This is why I'm saying we moved nowhere Tuesday, Wednesday, Thursday, Friday, because on Tuesday we closed at 73.65. On Wednesday, we closed at 73.58. On Thursday, we closed at 73.57 and a half. On Friday, we closed at 73.54. Y'all heard that, right? 54 to 68, 14 points from the low close to the high close. That's why this market has to prove to me that it's doing anything but chopping right now. Okay. Here is your demand zone that was tested 72.87 by 72.21. Here is the supply zone, the daily 21, all up in here around 74.50. I would be looking for selling pressure. Now that would be about 100 points above where we're at, and we are currently made up about 60 of those. Okay, so if you add 60 to where we're at right now, we are up and above this 74.04 level. That would put us at about 74.14. 7414, right at the top of the daily cloud. If price can indeed not just get above here, but close above here, that makes me much more excited to look for the upside and price to actually get back up to this daily supply zone on SPX. But if we do nothing but create a big topping wick up here and then we sell off and we come back and we close down in this godforsaken range right here, then my bias stays that we're still chopping. Okay. This is where I would be a seller. This is my first initial area to be a buyer. If I'm looking for the area that we did not make it down to and test last week, it would be 71.62 to 70.46. Okay. For our chart, top and chop. This is no longer. That was last week's lower weekly edge. This is this week's lower weekly edge. This is not the weekly edge mid for this week, but here's your top and chop. You notice that price, if we opened right now, would be opening right about here. See, top of the choppy range, my friends. Okay. Down in here is the bottom of this choppy range. That's why that lower weekly edge, somewhere around 73.20, 73.21, is going to represent my first buy zone today on SPX because of the lower weekly edge, the bottom of the chop, the lower daily edge, and last week's low. That's going to be my first buy zone. Let's look at that intraday chart. There is my first buy zone right at where I told you it would be. This 73.54 is where we closed. Okay. So right now we're opening up above a monthly edge mid that is still in place for 2 more days. But we're opening up where? Right in resistance. If we open up 60 points up, we're going to be right in this gray zone, this sell zone that for all the reasons I've already pointed out to you. All right, so somewhere between wherever we open and 74.28, which was not last week's high because Monday we actually was up here, right? But the top of what was very choppy 4 days, if we can get above 74.28, then I think we got pretty clear skies on SPX to fill that gap to 74.65. Above there, I would target the upper weekly edge of 75.03 and 75.30. You have inside and down, inside, gap down. Okay. So if this, then that, if we open up right around here and we get huge momentum, get above 74.28, I'd say there's a pretty good chance we can at least test 74.65. If, though, we open up in resistance, we start selling off, price gets below that PMZ, I'm looking for price to pull back to 7,400 key even round number, all of those things. The bottom of this zone would now be support. Then below there, 73.87, which is going to line up with today's upper week or daily edge, which is now support if price opens above it. So my first target, if we open here and the PMZ's here and we're below it and I go short, my first target is going to be 74.05, then 73.87, 73.54, and back to this buy zone 73.20 to 72.94. The bigger picture demand zone 72.77, 71.74, and the bigger picture supply zone 74.65 to 75.30. These are my set and forget zones, sell zone and buy zone. Okay. All right. Yeah, other than that, I mean, if I just look at my PMZ watch list, which has your Mag 7s in it, and then some other key names that I watch in different sectors, I can see that for the most part, everything is green except for the VIX, which that makes sense. We're having a nice gap up here. But gold is still falling. Apple is flat, but I mean, barely red. IWM, the Russell, well, IWM is red, but the Russell's green. So there's that. For the most part, everything is green. If I were looking at the sectors to see where the strength and weakness is this morning, I just looked down at all of these different sectors and I'm looking which ones are up the biggest percentage. And I can see that communications is up almost 2% today. That means Google, Meta, they're probably really, really moving right now, right? So we've got some strength in XLC this morning. Another area, semiconductors is up almost 1%. Tech itself is up 1.32%. So you definitely have strength in communications, tech, and semiconductors right now. You have weakness in jets, the airlines, and gold. And you're flat, you're more defensive areas of the market are flat right now. So what was looking strong, healthcare was really strong over the last couple of weeks. We had a great swing trade in Merck. I've got another plan if Merck can pull back, and got some other names on my watch list for this week for potential swing trades. But looks like healthcare, although it's green, it's not leading today for sure. What other areas? Financials was strong last week. They're only up 0.17. So, they're up, but not much. They're not leading. Same with industrials. So you're seeing, the weakness that was the latter part of last week being tech and semiconductors. They are the ones that are showing the strength this morning. All right. So if you were looking to day trade something to the upside, I would focus on names in the tech space or semiconductor space or communications space. So, yeah, that's what I'm seeing right now. SpaceX has been the talk of the town as far as new exciting things to trade. SpaceX came back down into a demand zone at 150 to 135, and we're basically just basing right there. So, from a day trading perspective, if you look at this 2 hour chart and you look at your daily edges, look at the inside and down right here on this 2 hour on SpaceX. You see it right here from Thursday. You got big candle down. We came back up. We tested it. We rejected it. We've tested it this morning again. And so far, rejection. But this would be the target to the upside for a day trade for me on SpaceX. And I'm going to go ahead and put it right at this upper daily edge. So it's 157 to 163.6. That would be an upside target right there. And then as far as where I would look to buy a dip, it's going to be at or around 151 to 146, 147. And what happens in between here, I can put a line at this gap where we gapped up. You got inside and up right here at about 155. So that can give me trim levels between the sell zone and the buy zone. And then you're going to get a PMZ that comes up here. The PMZ on a 5-minute chart on SpaceX right now is going to give you a risk of about 73 points. The PMZ high is 156.52, right? And the PMZ low 155.79. So price just broke below 155.79. So that means it would be a trigger short. I would be targeting 155. Then I could use this buy zone here at 154 to 153.61. Then below there, 152.77. And finally, the buy zone. So I can trade SpaceX to the upside or downside based on the PMZ, right? I just wait for the PMZ to pop up, and I already have the levels that I would trim at. If price gets above the PMZ on SpaceX, just like if I was trading SPX, I'm going to be trimming at the levels that are above price. As I take my trim at my first target, I exit half of my position and then I move my stop to break even. All right. Any other names that just, while we have a few minutes here, any other names that maybe you want to do a trade plan on for intraday? All right. I will do some of that. Let's look at Apple, Julian. So I use 2-hour charts for my zones. Apple's one that I regularly have mapped out, so I don't really have to do anything to Apple. The only thing I would do on Apple is actually move this buy zone or this demand zone up to that lower weekly edge just to have that weekly edge in there. And then I wait for the PMZ to pop up on Apple. Right now, it looks like it's going to be about 32 cents wide. I can tell you right now, any of these names on my list, I have a minimum of a 50-cent risk automatically. Okay. But this is what that Apple chart would look like for me. So I would go long above 284.28. So if price can get above 284.28, I'm going to trim at 284.61, 287.10, and target 291 to 302. All right. If price goes below the PMZ low of 283.96, then I'm targeting 283.63. The line in the sand here at 282.20, then 279.5, 271.01 to 267.04. That's what my day trading plan for Apple would be. Now let's look. Rad would like to look at Netflix. Let's take a look at Netflix first, starting out with the 2-hour chart. Okay, 2-hour chart. I got to make just some small adjustments here so that this is from Friday's plan. Looks good there. Cancel whatever I was trying to do with that. We're going to remove that. And I'm going to bring this line up because pretty obvious lower daily edge, lower weekly edge, and then this low. This was a demand zone. It's just from way far back. So let me make it green so that it matches everything else, Rad. All right. So this is what it looks like for me on Netflix. Okay. Now this is the 2-hour. Here's your supply and here's your demand. And I go to a 5-minute and I get my PMZ values. All right. And I got my trims and I got my supply and demand, and I'm ready to rock and roll when the market opens, right? So right now my PMZ is only 12 cents wide. Look, it's got to be 50 minimum for me. All right, above 74.62, that is a trigger long. 74.78 is a target, and then 76.39. Finally, 77.60 to 79.10. Below the PMZ low of 74.50, that is a trigger short. I want to trim right here the line in the sand about 73.80, then 73.07, and targeting 71.95 to 70.66. Tesla is the next name requested. Same thing. Obviously, we're going to start fresh with this name. I first look for imbalance candles. You see the imbalance candle, just look left, find your consolidation area, and draw you a box around it. Okay. Boom, boom, boom. All right, that's the initial zone. I can't push them out for a whole year because it makes the box pixelated when I zoom in on a 5-minute chart. All right. There's your buy zone. Lower weekly edge would be a target right down there. I want to look up to the left and I want to find the bigger than usual candles above where price is currently at to give me a target for an intraday trade here. All right. So here is a nice target to the upside from above a PMZ. Now, I do have a monthly edge and a daily edge all right here at about 385. So that would be a target before this supply. All right. Let's just pretend together that Tesla takes out 398. If it does, this is your upside target above. Okay. But nonetheless, a PMZ trade above PMZ high of 383.21. I would look to go long and trimming at 385.61, 3 to 387.22, and then targeting 394.20 to 397.74. As far as the downside goes, below 382.74, which price is below it, right? I would look to trim right here. You got a pre-market or recent low, not the pre-market low. That's all the way down here close to the VWAP. See it right here? Hold on. Sorry about that. So 381.33 would be a target down there. Your line in the sand 377.25, then 373.81, which happens to be the lower weekly edge. Finally targeting about 370 to 367 on Tesla. AH would like to look at JPM. JPM banks all very bullish over the last little bit here. The 4-hour, 2-hour, those charts drive me crazy because those big old bottoming wicks are asinine. But let me see on this 2-hour chart. All right, we got a lower weekly, lower daily, all right in here. You also got inside and up candlestick structure. This is an immediate buy zone here, but remember, financials are not showing a lot of strength, okay, today, right now. So this is a buy zone, but I would proceed with caution because if we take out, yes, Friday's low, then I believe price is coming down to here. Okay. That's a target. Yep. And we can draw a big O red zone on this imbalance candle right here. Right there, right there. There's your upper weekly edge. So here's you some targets, right? Now, this could be the immediate buy zone, but again, we're not seeing a lot of strength in financials right now, so I would proceed with caution at that zone. It would be a target to the downside, though, from a PMZ trade. Your PMZ right now, 15 cents a risk. I'd widen that thing to 50 cents. Trigger long to 329.76. Above 329.76, I'm targeting 332. Then look at your upper daily edge there at about 335. And finally, 336 all the way up to 343. Below the PMZ low of 329.61, I would be targeting 328.62, 327.50, and then 321.8 by 318.84. That's what I see for JPM. Let me just check with my fam in the SPX room, see if anybody requested something. Okay, Google, you got it. So Google looks something like this. Here's your buy zone, here's your sell zone, and here's some targets in between. PMZ high 341.30. Above 341.30, I'd be targeting 327.47, 346, and finally 349.5 to 353.5. Below the PMZ low of 341, I would be targeting 337.22. Then wait for it, 333.5, and then 331. All right. All right, guys, I need to take about 10, 15 minutes before the market opens to rest my voice because I will be going downhill quick if I don't. I know, right, DMC? Yeah. Tomorrow will be different because I won't have to explain all of the way that things will be different over the next couple of weeks. But all right, here we go. I will be back. I'm going to share my future screen in both rooms. The SPX screen will be in the SPX room. And then after the first hour of the live trading, I will take a break and then I'll hop between rooms answering questions and stuff. All right, guys? All right. Let's have an awesome day. I'll be back on 5 minutes before the bell.